Let's look at the financial statements and financial accounting. Financial statements are reports created on a periodic basis by companies for the purpose of communicating financial information to those outside the company. These are also called external users. There are four basic financial statements: the income statement, the statement of stockholders' equity, the balance sheet, and the statement of cash flows. The income statement, the statement of stockholders' equity, and the statement of cash flows all show financial information over a period of time. This could be a month, a quarter, or a year. The balance sheet shows financial information at a specific time. All financial statements will start with a heading. The company name, the statement name, and the time period or date are all included. Let's start with the income statement. The income statement shows us the equation revenue minus expenses equals net income. It's also called the statement of income, statement of earnings, and profit and loss. It's prepared first out of the financial statements. It answers the question, is the company making money from operations? Let's look at Level Up Gaming's income statement for the year ending December 31st, 2021. The company has service revenue of $12,000. The company has expenses, including salaries expense of $4,000 and rent expense of $2,500, for a total of $6,500. To determine the net income, we'll take revenue, $12,000, minus expenses, $6,500, to get net income of $5,500. Notice that the bottom line has a double underline under the $5,500. This is to let you know it's the end of the statement. Next is the statement of stockholders' equity. We know that common stock plus retained earnings equals stockholders' equity. Another name for the statement of stockholders' equity is statement of owner's equity. It's prepared after the income statement, and it shows changes in owner equity over a period of time. Let's look at Level Up Gaming's statement of stockholders' equity for the year ending December 31st, 2021. Total stockholders' equity is made up of common stock and retained earnings, and each of these items has a column on the statement. We'll begin with the beginning balance on January 1st. Common stock had a beginning balance of $25,000. Retained earnings had a beginning balance of $12,500. We take common stock plus retained earnings to equal the total stockholders' equity across the row. So $25,000 plus $12,500 equals $37,500. Next up, the company issued common stock. We will add this under the common stock column for $15,000. We'll do nothing under the retained earnings column, and we'll carry the $15,000 over to total stockholders' equity because common stock plus retained earnings equals total stockholders' equity in each row. Next, we add net income. This has no impact on common stock, but increases retained earnings, therefore increasing our total stockholders' equity. Next, we take out dividends. This reduces retained earnings by $3,000 and reduces total stockholders' equity by $3,000. The ending balances are figured out for each column. For common stock, you'll take $25,000 plus $15,000 to get $40,000. For retained earnings, you'll take $12,500 plus $5,500 minus $3,000 to get $15,000. For total stockholders' equity, you can add and subtract down the column, or you can add common stock and retained earnings across. Either way, you're going to get the same answer, $55,000. Next, let's look at the balance sheet. The balance sheet shows us the accounting equation, which is assets equal liabilities plus stockholders' equity, or as we call it, A equals L plus SE. This is the financial position of a company at a point in time. It shows the resources of the company and the claims to those resources. Let's look at the balance sheet for Level Up Gaming on December 31st, 2021. We start with assets. The company's assets include cash, equipment, and supplies for total assets of $60,000. Next, we can look at liabilities. The company has accounts payable of $1,000 and notes payable of $4,000 for total liabilities of $5,000. Then we do stockholders' equity. This includes common stock of $40,000 and retained earnings of $15,000. The total liabilities in stockholders' equity will be equal to the total assets at $60,000. Next, let's look at the statement of cash flows. This tracks the movement of cash during the period. It assigns cash exchanges into 3 categories: operating, investing, and financing. Operating cash flows involve cash flows related to the day-to-day operations of the company. Investing cash flows involve the purchase and sale of long-term assets. Financing cash flows involve transactions with investors and creditors. Let's look at the statement of cash flows for Level Up Gaming for the year ending December 31st, 2021. We'll have the cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. We'll start with operating activities. We'll have cash inflows from customers of $12,000 and cash outflows that include the salaries expense of $4,000 and the rent expense of $2,500. So the net cash flows from operating activities equals $5,500. Next, we move on to investing activities. The company purchased equipment for $5,000. So the net cash flows from investing activities is a negative $5,000. Finally, we look at the cash flows from financing activities. This includes issuing common stock for $15,000 and paying dividends for $3,000. The net cash flows from financing activities is equal to $12,000. The net increase in cash is determined by taking the net cash flows from operating activities, investing activities, and financing activities together. Next, we look at the cash at the beginning of the period, and we add it to the net increase in cash to determine the cash at the end of the period, which should equal the cash on your balance sheet. In this example, the cash at the end of the period is $40,000.